So the one thing that I learned when trading options, and in particular selling options, is keep bringing in credit, i.e. keep bringing in cash into the account, even when trades have gone against you. And when you eventually get out of the trade, you will end up with not only more cash flow, and a positive P&L. Now, I'm going to walk you through an example on the screen of a 1-1-1 trade, which is, again, my bread and butter standard trade, which in this example, I got into a bit of trouble. So I rolled this position out, and I wish I didn't actually, because now I've looked at where it's trading at the moment, I would have closed this position out in profit, but that's regardless of the point. But what it does do is illustrate my point about bringing cash in and not worrying about the realized P&L, even if it's negative at this point in time. So again, you can pick up the 1-1-1 trading strategy. The link is down below. If you want a free coaching call with me to understand more about how I trade options and make a second income or potentially replace your current income, then again, you can book free coaching down below. What we've got here is an extract of my Bloom Energy trades that I've done from my Interactive Brokers account, and we're just going to walk it through. So I've put it into 3 different sections here. The first section is the opening of the trade. The second section is closing out that opening trade. And the third section is the new trade that I've opened. So again, not going to go into the details of the strategy and the legs and all these kind of good things for now. All I'm really going to focus on is the proceeds column and the realized column. So the proceeds column is effectively the premium I collected or I paid as a result of all these trades. And the realized P&L is my current position on my profit and loss account, i.e. how much tax I've really got to pay as it currently stands on this trade. So you can see here, I collect $93 of premium. Now, I can make potentially more because I've got a $3 wide strike and all these types of things. So my max profit was around $397. But again, as it currently stands, all I cared about is that I took in $93 for this 4-day trade. And obviously my realized P&L is 0 because the trade is open, as you can see from the code 0, which basically means, or O, which means open. So I placed that trade on the 28th. So the next day, the stock went against me. So I went past my trap on my 1-1-1, and I still had about 2 days left to go. Now, I made the decision to roll this position out into the December cycle. So again, I sold the 31st of October. I bought back the 31st of October, and I reopened the position for the 19th of December. Now, when we roll a position, as you can see here by my date and time these positions were made, it automatically closes the position and automatically opens the new position all in one trade, right? So when you break this out into 2 different sections, this is what happens. So if we look at my premium tab, remember, I brought $93 of premium. The trade went against me, so I paid back $747 as a debit. So when we add it all together, that is a minus $654. And when you take commissions into account, it is minus $655, which again, if you look at the realized P&L, equals to your $655, because I opened the trade with commissions for $92, so I collected $92 and I gave back $747, giving me a negative realized P&L of $655. Now, most people say you didn't make money on this trade, you lost money, you lost $655, which I can't argue. It is true. I lost $655. But the bit you're not taking into account, or what people say they're not taking into account, is that I reopened the trade. So just in terms of strikes, I bought the 109, sold the 112, and sold the 129, right? So now I moved my strikes further out in time from October cycle to the December cycle and moved my strikes up. So now I bought the 170, sold the 175, and sold the 180. Now, if I then now look at my proceeds on that, I collected $1,235 in premium. So this is what I mean by the start of the video when I say you want to keep collecting cash. So when you actually take into account the debit that I paid for this trade and the credit I paid, my overall net credit for that trade was $488. So again, this is what I mean. We want to keep bringing in cash. So I've improved my strikes by pushing them further up and pushing out further in time to generate an additional $488 of cash I've collected in my account. You've got to remember, I've got a realized P&L of minus 658.55. But in terms of my cash, I've brought in another 488. Now you've got to remember at the beginning, we brought in 93, and then we gave back 600, then we gave back 700 or whatever it was, so it'd be 645. Now, if I go back to hit and highlight everything, the total cash I've collected in this trade is $581. Now, what that basically means is if this option expires worthless, i.e. even if this debit expires worthless, and this $1,353 of premium I collected expires worthless, i.e. this stock, Bloom Energy, does not get to $180 by December the 19th, and as of today's recording, it's trading at 125. And you can see here, 125 would have brought me nicely back into my zone here where I would have realized the full potential profit. But again, I wasn't to know that. And again, this just shows the power of the 111 strategy, etc. But it also shows the flexibility of the 111 strategy of how I can push things out further in time. So either way, if this 1350 expires worthless and it doesn't get to 180, I'm going to realize this whole trade. I'm going to realize this whole $1,235. If I realize that, and then obviously if I take out the loss, I would make $579, right? Or i.e. this pre-commission's 581. So total, if this whole thing expired worthless, I would make $578 from this trade. So not only do I close the trade for a winner, I actually make more money, right, as a result of placing the trade. So I have closed out this trade that I originally opened. I have closed it out for a negative $655 loss. But that 655 is sitting in the 1235 that I've opened simultaneously by close. So this is why when I keep rolling positions that have gone against me, whether I've got I sold at the 20 delta and the price has gone down and now it's worth 45 delta, so therefore my P&L is showing negative. But I can roll it out in time and down in strike for another $2 credit. I pick up a realized loss, which you can see here, but I'm picking up more and more premium or more and more cash that, again, I'm using for passive income and all these other good things until that realized P&L or the option expires worthless, and therefore my realized P&L realizes 1235. So when this closes, when I do my close trades here, hopefully I can get anything above 655. So my break even, right? Let's just park for a second the commissions. So 654, so 1235 minus 654. So if the whole position is worth 500, if I can close it for a 581 debit, I'll break even on this trade, right? Because then whatever the difference is here, the 654 will come up as a realized over here, which then will give me a realized P&L of 0. So again, there's options here. I don't have to wait all the way to expiration. If I just want to get out of this position, I just need to be patient. And again, my strikes are quite far out. Again, it's trading at 124. It's at 180. So 180 minus 124 is 56 divided by, what's the current price? Sorry, 124, is that right? Yeah, so it has to move another 45%. It's had earnings. It didn't go the way I wanted. All is good. Well, it actually did go the way I wanted, but let's just park that conversation for another day. But at the same time, where we've got a situation here where the stock has to make another 50% move, and again today, just looking at the chart here, it is down. It's down 2.33%. So again, it's coming back down now to fill the gap it created on earnings, which again is fine. Like, it is what it is. I just didn't know when it was going to fill that gap, and it's filled it in the same current week of October the 31st. So I wanted to show that it's not all about your realized P&L. It's all about your cash that you're bringing in, and the cash you're bringing in contains your realized loss that you got. So the key moral of this whole point is keep rolling for credit. So as long as you keep rolling for credit, so you're tracking it on a spreadsheet, something like this, then you will always get out of the trade, at least at break even, a smaller loss, or hopefully profit at the end of it. So again, if you want to learn how I do this and how I track everything, again, the coaching call link is down below. get on there, and then let's have a chat. Let's see if we can work well together, and then let's go from there. And I shall see you guys in the next video.